but I think you'll find this teaching will be beneficial to you nonetheless. Okay, folks, everything you seek in price action is found in this formation: the open, the high, the low, and the close. The ICT concepts used in this module will be the importance of time and price. We're going to be revisiting the power of 3, and we're going to be specifically teaching monthly time and price characteristics, weekly time and price characteristics, and finally, daily time and price characteristics. Okay, ICT Power 3 and the monthly open. Now, price action is fractal in nature. That means everything that you can see in terms of a price pattern on a 1-minute chart, on a 5-minute chart, can be seen on a monthly chart or weekly, any time frame, any interval of time measurement that plots price. The fact that we can see a pattern on any specific time frame, price action has a generic characteristic to it, so whatever we see on one time frame could be easily replicated and seen on a lower time frame or a higher time frame. So when we see price patterns, it's not that one time frame is better than the other per se, but there is an emphasis or significance that's placed on the higher time frame charts over the lesser time frames. For instance, the monthly has the most significance to me in my analysis, and because it gives me the ability to look at a whole year or multi-years, or I can look at it from a quarterly basis or a biannual basis, in other words, in 6-month intervals. So I don't need to see any other time frame because the monthly gives me all the depth and detail that I would ever need from a macro standpoint. Which brings me to the purpose of using a monthly chart is that it provides a macro institutional bias. So we can see what large institutions are doing or what their sentiment is based on what these higher time frame monthly charts are revealing in price action. In a nutshell, if we are doing our analysis on the monthly chart and we deem that monthly chart to be bullish, we as traders and analysts, we look for buying opportunities at the opening price or below the opening price. If we have come to the conclusion that the monthly chart or perspective on the monthly is bearish, then we are focusing our analysis on selling short at or above the monthly opening price. Now, large institutions use algorithmic systems that key off of monthly and weekly opening prices. Since there are massive amounts of volume in these entities' actions, we would do well to imitate or mimic their actions and directional bias. So let's take a closer look at this monthly chart. This is the euro dollar. And if you've gone through my material, there's a lot of things that I teach by way of directional bias, picking a direction, sticking with a specific direction, looking for key levels, looking for key targets, looking at this sample size of price action on a monthly basis for the euro dollar. I want you to take a look at what you're seeing in price action. Now, obviously, majority of what's already happened is all hindsight, but it's for your learning. For the individuals that have gone through my mentorship in 2016, 2017, they know that I was bullish in the first quarter of 2017 with the euro dollar. And I called a specific price point of 120 at that time. Several months later, here we are in December of 2017, you can see we did in fact hit that 120 mile marker on the euro dollar. And it was based on what I'm about to show you here. A lot of other things that go along with it to help fine-tune that detail, but generally it started with this concept. So do you see anything that stands out in the chart? For instance, this old low over here. They're relatively equal. Price makes an attempt to drop lower, and it does in fact go below these equal lows. And then it does what? It trades back above those lows. And then we have a swing low form. We have a candle to the left with a higher low, a candle in the center, and a candle to the right. So there's our 3-bar pattern or swing low. And then we wait for that third candle to be penetrated. We have it here. So that way, now we can start looking for being bullish on the monthly chart for the euro dollar. We see the previous month, even though it had a weaker close, it still was an up close. And because we broke the swing pattern for a swing low to be valid, every subsequent candle should be viewed as bullish until we get to some key resistance. This is a key high. It's caused a market turn. So we're going to have to keep our focus on here. And just like we saw market movement go below this low here, true support and resistance isn't line in the sand. It can't go any higher than that. We understand that there's going to be a willingness to want to go through that high to seek some measure of liquidity, just like it looked for liquidity below these lows. So with those ideas in mind, let's add some lipstick to this chart. So now we have a long-term key low here, and we have a long-term reversal in the form of a false break below, swing low forms, and then I started delineating all the opening prices on the subsequent months. So every one of these candles represents one full month's data. And then I noted the long-term key high here. So we would be looking for down here a move above this high, which if you think about it, that is a lot of pips. So I know I've been doing a lot of work on Twitter and on my YouTube channel to be active with day trading and scalping, just to show my proficiency in studying and reading price action and executing on those lower time frames. I have tools and applications that work on higher time frame charts like this. If you can't do day trading, I have methods that help you do these types of things. I personally do not like this style of trading. It's too slow. It doesn't give me enough action. And I just excel as a short-term intraday trader and day trader and short-term trader for one shot, one kill. There are many students of mine that can't do that because of their businesses that they're running or their jobs, or they're just unable to do it because of their family commitments. They just can't do it. So they need a larger or higher time frame perspective. And this is one way you can do that. So we have a monthly chart here with the opening prices after a swing low and a violation of an old low. And once we start to trade back above that low here, we start looking for validation with this swing low being in fact valid. And we have that on this month here. So we had plenty of time, several months before this month begins the hunt for longs. So it gives you lots of time to get prepared. You don't have to be in front of your charts every 5 seconds. In fact, you don't even have to probably watch it every day. You just got to be aware that this swing low has to be validated, and it does it here when it starts to trade above this candle's high. So with this information, let's take a closer look. And now we have the daily chart of the euro dollar, and what I have here is every specific monthly opening price delineated with a small little horizontal trend line segment. So each little short trend line that's moving horizontally, starting with this one here, this represents a monthly open with the opening price of the month. And this is another one, this is another one, this is another one, another one, and finally the one up here is the last one I'm going to reference in this specific teaching. So we're going to start with April 2017, and we have seen a potential long-term reversal, and we're going to be looking for buying opportunities, and we're going to look for validation to see that in price action. Now, if we're bullish, we want to see signatures in price action that support that idea. That means the opening price, and below it, we want to see some bullishness or buying. So is there a swing low that forms below the opening price on the monthly? And is it showing energetic price action once that low forms, and does it move higher with magnitude, strength, and speed? Well, we have that here. And not too long after that, we start seeing price move higher. Obviously, I'm using this chart with the benefit of hindsight for time purposes to save a lot of time in the recording. But you can see that reference point there below the opening price of April gives us a nice buying opportunity. You can look at many instances of overlapping for optimal trade entry at that price point. And we're moving to the next month. This is May 2017. Again, we're looking at that opening price of May 2017. And we want to see a willingness to go below the opening price and then find buying. We have that here. And again, very, very strong reaction in price action. and the market starts to move rather aggressively on the upside. Moving right along, we're going into the next month. This is June 2017. And again, we have the opening price of June. And below the opening price, we want to see buying. We see that, in fact, does come to fruition here. Very nice accelerated movement on the upside. And again, now we have July of 2017, the opening price delineated. And we want to see a movement below the opening price and then buying. Nice optimal trade entry, long pattern there as well. Very, very explosive price action up to that horizontal maroon color line. That is that old long-term high. So now we hit that in the month of July. At that price point, now we have to start easing off of our expectations of being bullish. Doesn't mean completely abandon the idea. It just means that we have to slow down and not be so aggressive. But we can be aggressive in looking for that long-term high to be traded to every previous month. But now in July, we can see price did in fact hit that level. So we have to be mindful that it could stop. Now the next month here is August of 2017. Similar pattern. We have movement below the opening price of August. And again, a nice little rally up. And it moves, well, it moves about 400 plus points or pips above the old long-term high. So obviously we can't use a 10 to 20 to 30 pip sweep idea like we do with intraday charts, looking for movements beyond the old highs and old lows or double bottoms and double tops. When we are using longer term time frame levels, we have to have a greater expectation in terms of the magnitude or range of how far it'll move past those price points. Now, I don't have a science to that. I do use Fibonacci to help me get to those levels. It's not always accurate. Sometimes it falls short of it, and sometimes it goes beyond what I thought was going to happen. And that's technical analysis and trading. You're never going to be perfect. You're never going to be right. But over time, you're going to see that this method serves you very, very well. Now, we can take these ideas also and transpose them to the weekly opening price. Now, this is going to be the framework for a lot of the things that I teach in my mentorship for my one-shot, one-kill, which is essentially trading the weekly range. Now, I'm not going to be teaching that here, but I will give you some of the signature points that will help you with the free tutorials to get really close to how I do one-shot, one-kill. But if you want to learn it, you can go through the mentorship and get all the fine details about how to do it and how I look for it, get the weekly high and the weekly lows. Well, if we go through this specific idea with weekly opening price, again, price action is fractal. And what we would see on a monthly basis, we would expect to see that same thing on a weekly basis. So the weekly charts provide an intermediate institutional bias. That means it's not a long-term bias, but it's not short-term either. So it's a pretty good time frame to look for like swing trades or even a little bit longer-term, short-term trades, not just 1 or 2 day trades in duration. Longer term, like 2 weeks to a month, this is the perspective you want to be looking for to get those types of setups. But what we use for the weekly open, if we know that our analysis leads us to a bullish weekly perspective, we're going to be focusing on buying at or below the weekly opening price when bullish. And when we're bearish on the weekly, we're going to be focusing on selling short at or above the weekly opening price. Now, large shifts in price that originate from the macro monthly bias will provide the framework of weekly opening price setups. Now, here's a key point. Make sure you remember this because it's not that every week is going to be bullish or bearish. Not every week will move in the macro directional bias. But however, there will be some weeks that move violently in agreement with the macro monthly bias. So just like we have retracements on any other time frame, we may be longer term bullish on the macro monthly perspective, and in the weekly we may be enduring some measure of retracement or consolidation. Okay, this chart shows 4 weeks of price action, and I've highlighted or delineated the opening price for every respective week here. And I want you to take a look at the response. That price shows below the opening price while we're bullish, and then while price makes a really nice buying opportunity here in that green shaded area, and it really vaults higher. Price gets a little too far ahead of itself and needs to retrace. So the next week, so even though we have the weekly opening price and it does trade below it, we have to be mindful that it may be needing to retrace deeper. The following week, after a retracement and slight consolidation, we have another opportunity where price shows a willingness to show buying strength below the opening price of the weekly range. And again, later in the week on Thursday of that particular week, we see another opportunity after taking out the equal lows that were formed on Monday and Tuesday of this particular week. So there was two opportunities to buy. Monday and Tuesday offered profitability, but then on Thursday it had a deep retracement, retracing down below the Monday and Tuesday's low. But if you look at the previous week, the Wednesday, this low here to this high here, this is an optimal trade entry long. And it's nice how it just overlaps with a run on sell stops below equal lows. And we see a subsequent explosive move to the upside. And in the following week, on Monday of that week, we see that it does create a very nice buying opportunity, and an explosive price movement ensues on Monday trading into Tuesday. Then during Wednesday and Thursday, there's a retracement, and in New York of Thursday has an explosive price move again, and that's when we see it trade up into that long-term weekly high. Okay, moving right along. To complete this teaching, we're going to be referring to now the opening price on the daily. So again, price action is fractal, and what we would see on other time frames can be seen on the daily as well. But the daily chart provides us a short-term institutional bias. So in other words, what the large institutions, insurance companies, and banks, what they're looking at relative to the daily time frame, that's going to be their short term. Now we look at a daily chart from an analyst standpoint because as day traders and scalpers, the daily is like referred to as a higher time frame. For institutional minded traders, the daily is just like that's their executable time frame. That's where they're doing most of their work. The orders are based around that time frame. And that's why it's important to know previous days highs and lows, weekly highs and lows, intra-week highs and lows, and knowing what the liquidity reference points are around those specific levels, that's going to help you in your development as a technical analyst. But if we're bullish relative to the daily time frame, we are looking to be buying at or below the daily opening price. And if we're bearish on the daily, we're going to be focusing on selling short at or above the daily opening price. Now, the market will gyrate higher and lower relative to the monthly and or weekly perspectives, as we mentioned in the previous slides. The highest probabilities in trading the daily chart is when both the monthly and weekly support the trade idea that you would be using or hunting on the daily. Focusing on the elements of time and price will greatly assist you in analysis and overall development as a technical analyst. If we look at this representation of a daily range here, notice I'm only highlighting one specific day. The teaching that I just gave you here is not to promote the idea that if the monthly is bullish, every week's going to be bullish below the opening, and or every day is going to be bullish below the daily opening. Equally so, when the weekly is bullish, it does not translate into every day below the opening price is bullish. There's going to be times when you have to blend some analysis concepts to arrive at the highest probability setups. Even day trading is not everyday trading. I've said this so many times over the last 10 plus years teaching just Forex alone, and I want to ingrain that in your mind that even though we have tools, and I've shown this in the last 2 months online, every single day finding a setup, I do that to show you what's available in terms of opportunity and understanding. I am in no way, shape, or form trying to promote the idea that you can find a setup yourself every single trading day. I've been doing this for 25 plus years, and it takes a lot of effort and experience to get to that level. And I'm sometimes wrong too, but many of my new students will see that and they'll say, well, I'm going to do the same thing. And I'm not trying to promote that idea. This teaching was to highlight the importance of going from a higher time frame down to a lower time frame using a similar concept that overlaps and dovetails very nicely, But I want you to go through your charts and study when there are really good opportunities, like this example here for the daily, buying below the opening price. Where does that sit in relationship to what the weekly range and the monthly range and their respective opening prices? Because if you study that, you will figure out where the highest probability setups are. Doesn't mean that you're getting the entry points. It just means that you're highlighting the proper stage when these explosive price moves that move directionally biased happen. So hopefully you found this teaching insightful, and until next time, I wish you good luck and good trading.